Rate drop Friday, rate increase Monday, Tuesday, Wednesday. Now what? I don't know. Cliff note version of what we're expecting, what's important to you, and what you need to know. The first thing we want to talk about is the CEO of ZipRecruiter came out and he talked about seasonal hires in the labor market. That number has declined each and every single month since 2022. So we know the labor market is softening like butter in the microwave, but how bad is it? Well, like I talked about in a previous video, we could see the announcement of a recession. That's going to come down to the unemployment rate that's going to be announced next month. If we have that 4.2%, which we're already above that, we could hear those recession talks. But why is this important? Well, believe it or not, there is something out there that gives odds on how much the Fed is going to cut rate. Well, when it comes to September, there's a 76% chance, right now, those are the betting odds, that the Fed will cut rates by a half, not a quarter. That's kind of a lock at this point. But to cut 0.5% in September, the odds are 76% that they're going to do that. And a lot of it stems back from the labor market. So what impact is this going to have on us? Well, with an economy that's not doing strong and that rate cut and the stuff going on overseas right now in Japan, who really knows? But if we see a half point rate cut, that's going to weaken the dollar, especially against the yen. So it's going to cause some problems, but eventually that's going to bleed over into mortgage interest rates. It's going to trigger a bunch of people to get in on the game to buy homes and refinance. So that's why I've been telling people, if this is what you're thinking, you need to get in line now and get going, because if this does happen, which it looks like it will, you want to be able to take advantage of it, because here's a couple other key points. CoreLogic just came out with their report. Year over year, homes are up 4.7%. Now this is nationally, so depending on the market, it could be more, it could be slightly less, but we're seeing a big increase. Not only that, Black Knight came out, which they're a little bit more conservative, and they show home appreciation year over year at 4.1%. Keep in mind, that's with higher interest rates. So between the two, it's an average of about 4.4% appreciation with high rates. Once we see rates come down, we're gonna see a big demand, but wait, there's more. We need to talk about pent-up demand, which is different than my pent-up frustrations. That's a different story. What we're looking at is people between the ages of 25 to 35 living at home, waiting or wanting to buy or rent. That percentage is 17%. That is the highest it's been since 1940. Now, if we look at history and we go back to 2010, that number was 15%, which led into an extremely strong housing market. So if we add in a little bit of rates declining over the next, we could see that change in a matter of a month or two, and then that pent-up demand flooding into the market on top of everyone else, we could see an extremely strong housing market going into 2025. So you want to have your ducks in a row and you want to be ready. The last thing we want to talk about is people who own a home and have that 3.5% interest rate. As rates come down, if we hit the fives, those people are going to be more comfortable with selling their home, taking that 5 to 5.5 to 5.75 rate because they can live with it to get in the home that they want. That's going to make it a little bit more challenging for our first-time home buyers trying to get into the market to compete against people that are next-time buyers. Maybe they're moving up or they're downsizing. This is going to be a challenge as we move forward with this market based on how home prices are still appreciating. The lower the rates go, the more those prices go up. And now we're going to see an external push from people that are going to want to sell now, and are people sitting on the bench living with mom and dad still wanting to get out there, on top of our renters looking to push into the market when rates are good according to them. So get your ducks in a row, rock and roll. Let me know if you have any questions. Thanks for checking out the video. We'll see you at the next one.